Good morning, gang. Good morning. Welcome to this week's Bitcoin update. First and foremost, remember, nothing discussed today is financial advice. I am not a financial advisor, and this is for educational purposes only. And now that's out of the way, let's jump into the Bitcoin chart, shall we? So it's been another great week. Now some people will call the recent price action chop, but there's plenty of reasons why this happened, and to be fair, there was plenty of money to be made in it. Now, you guys from the last Bitcoin video wanted me to continue with giving you updates on the reasons why I took said trades during the week and the trades that I've been sharing in the group. So we're going to start today by talking through some trades, the reasons why I took them. Hopefully you can learn from this, and then we're going to move on to then what I'm looking at next. So first and foremost, let's zoom in. Let's zoom into the 15-minute time frame, shall we? Now, obviously, we all know we had one range here, quite clear as day. So let's just draw this on. Got a new mouse, by the way, so there should be no misclicks this week. So one range here. Right now, are we getting acceptance back into it? That's one question. And then the next range that we had is this range right here. Okay, so we had a wonderful range to trade. So the last time we did a video would have been Thursday. We're doing around here. And obviously this is the range that we were looking at the time. So what happened, we created this lovely range. Got a deviation right up to the outside deviation fib. Got a nice rejection. Came back, retested the inside deviation fib. Came back in, retested the top of the range. So there were plenty of opportunities for shorts within this. Trading it back down to the EQ. Back up into the range high, EQ, range high, and then now we're in range lows, back up, and there we go. Now, how could we have traded this? Well, first and foremost, you trade up at your outside deviation was your most simple trade, in my opinion. You know, it's clear as day. When you're using this deviation fib, this makes your life so much easier when it comes to range trading, because you can see where you've got your defined range, so you easy entries and exits, but then you can also see where it's most likely to deviate from. So if you didn't catch any of that, you have plenty of opportunities to go get back in later on. Now, what can we say? So let's start off on Tuesday, shall we say? So obviously Monday, we opened up on Monday, and effectively obviously the weekly open, and we just dropped straight down. So your typical Monday or Tuesday play would be looking for reactions around your weekend highs and your weekend lows. In the end, it just rocked down. Now, by the time Monday had finished, we can zoom over to the TPO charts. We can see here that this is Monday's profile here. We can see, and Monday's profile finished off, not a perfect double distribution day, but it did look like a double distribution day. So we came down, we ranged, then we dropped down, created a bunch of single prints, and then we ranged again. Okay, so this is what we would refer to as a double distribution day when it comes to TPO, right? This is all the sort of stuff that I teach. Okay, so once I'd seen this, coming in to the group, then on Tuesday morning, I was coming in, giving my usual daily update that I always give. So Tuesday's plan, daily open outside of yesterday's value, potential for the 80% play. Still watching the sloping channel, because this was a channel that we were watching at the time. Now, again, this is down to Elliott wave theory. My local and high time frame areas of interest remain unchanged for now because we've not broken any structure. Now, for me, local support remains back towards 28k, which is within the previous range, and local resistance for me is the weekly open, or if it gets above that, it's the daily naked point of control at 30,800. Okay, so what happened in the end? So Tuesday opened. Bear in mind, in the back of my mind, I'm thinking, well, Monday's a double distribution day, so if we do get back up here, then we're likely going to revisit the start of the double distribution day, which is up here, the origin of the move. We also, on top of that, we had opened outside of Monday's value. Once we reclaim back into Monday's value, then you had a long trigger, right? Now, for me, I'm not going to sit here and lie up to you and say that I took that, because I didn't take that long trigger, because this all happened through the night for me. By the time I got to my computer, it was too late. So for me, I'm not going to FOMO in, but I know a lot of the guys in the group call this, right? Because it's just bread and butter plays. In the end, we came up, hovered around Monday's point of control for a little bit, came back up into the value area high of Monday. Now that would have been done and closed trade if you were trading that way, or you could have left it open a little bit higher. Now what happened a little bit higher? Well, we came into weekly open. Now if you think back to the plan that I've just shared, That was the biggest resistance on the chart for me, was the weekly open. Okay, so we came up into the weekly open. We came back down and we had a lovely little bounce. Now, this bounce happened on our Tuesday night stream. This little bounce, I was explaining to the guys in the group. Bullish day, first bounce, onto the VWAP. For me, that's a scalp long all day long. So a nice little 4-hour trade there, straight in the bag, locked in, done and dusted. Now, what I'm saying to the guys in the group is I'm looking for a sign of weakness. Now, where's the screenshot? Here we go. I'm saying to the guys in the group, see some weakness before then, I'll short. There's the single prints for reference that was created that day. This was created on the Tuesday. Now, I was still sat in my swing shorts from the high, but if we see some weakness here, I'll add back in and bring my average entry down. Now, what did I mean by that? Well, I'm still swing short from up here. And as I said, this was the major resistance on the chart for me. And if we start to see some weakness here, then I'll add back into my swing shorts, and which I did in the end. Now, anyone that didn't add back into the swing shorts, you had an opportunity then to get a new short on the go. We dropped, retested, weekly open. Okay. Then, in the end, we played it back down. Now, why did we play it back down? Well, again, if we open up the charts, you can see here, obviously, this was Monday's profile, double distribution day. This was Tuesday's profile. Now, this was a very thin and inefficient move, not creating any structure at all on the way up. Okay, and this is why, again, I've said this time and time again on this channel. People get really excited when you see a move like this. On low time frame, this is what you class as a parabolic move because it's effectively just gone up and it's not giving people a chance to buy back in. Okay, but as I was saying to the guys in the group, if this happens, bulk of today's volume is at the highs. And it's the same concept as a P or a B on delta profiles. Okay, now this is a concept that I teach within the group on delta profiles. All the volume on Tuesday's high was at the top. So if we start to lose that, then it's going to be a very quick drop to fill the inefficiency. Again, the thin move. So all this thin move, and in the end, we dropped back down again yesterday. Okay, so if you held on to that trade, again, congratulations, you got a 9-hour trade in the bag. Now again, like I've said the other week, people are looking at this and going, oh, but it's only a 5% move. Yeah, well, that's irrelevant is the size of the move. What's relevant is your risk to reward. Okay? That's what's relevant. If you'd have traded that using proper risk management, then you could have capitalized quite big on that because effectively it's a 9-hour trade. So 9 times your risk you got in reward there. So if you were risking $100, for example, because that's your 1% risk, then you potentially made $900. Okay? And obviously it finished off overnight last night. So that's the reason why all these trades took place. So you had, potentially, excluding this one because this was a scalp that took in the group, and in my opinion, this is the more riskier trade, but you had 2 very nice trade setups so far this week, excluding what happened on Monday. Monday you did have another nice trade setup, but anyway, that's a different story. So far you're doing quite well. Right? And again, this is all shared in real time in the group, giving it in my morning updates for the guys. So obviously, if you want to get involved in that, then first thing to do is come over to our website. Come join our free Discord. Loads of alpha shared in our free Discord. We've got many, many, many members in there now. I think we're over 1,000 members. And obviously, if you do want to take your training to the next level and you want to get involved in the private group and get access to my trading plans, along with over 80 hours of educational content, then come check out our course. Within the course, you get access to the private group, and it'll cost you a grand old price of £60. Okay, £60 for all the educational material plus access to my trading plans. And I'm not just trading Bitcoin, I'm trading Forex, I'm trading stocks, I'm trading altcoins. You know, there's many things. In fact, we've got a couple of stock trades on the go at the moment. You know, we had some nice Forex trades the other day. Sat in a couple of altcoin swing shorts at the moment because everyone thinks it's alt season, so why not short? But yeah, anyway, that's that. So what can happen next? Right, so let's turn off VWAP. Here we go. So, first and foremost, we're aware of the main range. Okay? The main range. We've been banging on about this for months, right? Next is this range. Okay? It's the next range to be aware of. And then obviously we've got the small range up here. So what I'm looking for next is, let's throw it on some volume profile, shall we? Within this. Right. So, first and foremost, there's my pencil. There it is. Unless it's moved all the way over there. There we go. So, first, what you've got to be looking at is this a deviation of this range? Okay, so that's option one. Is it a deviation? If it is, then you're looking to get acceptance back into this range. And if you are getting acceptance back into this range, then eyes firmly around this zone here, which is roughly around 28k. And you'll have seen that on the Tuesday update that I shared. Okay, so this zone here, because we've got a naked point of control here, it's untapped. We've also got a naked point of control above and a naked point of control up below it. Okay, so this is the first zone that I'd be interested in. So if price does roll over here, comes back into this zone, starts creating market structure change to the upside, then you've got a long trigger and you can trade it back up to the range high and then see if it gets back out of this range high. Okay, I'm not going to sit here and laugh and say, oh yeah, well, if it gets back up here, it's going to go out there and continue up, because nobody knows that. Nobody knows what's going to happen. Okay, we can have an idea. We can have a high time frame Elliott wave count in play, which we do right now in the group, but we don't know how it's going to react because it could go higher. Okay, so that be take profit one. If it does get above that, then you're looking into this old range here. Okay, a lot of resistance now in this zone, a lot of volume there. Now, if it doesn't get a reaction here, then quite simply, you'd be looking down towards the range lows. Now, getting back down towards these range lows, not going to look very healthy, but if you do get back towards these range lows, then you've got a pocket of liquidity here. You could be looking just to continue trading this range. Okay, but you want to see that reclaim. You'd want to see that sign of strength. Okay, this is where people go wrong with trading, is people see this and they see this and go, oh, it's definitely a swing failure pattern. Definitely a swing failure pattern. So I'm going to long it, and then all of a sudden it just carries on rolling over. Okay, so you need a plan. So for me, it would be see some strength, reclaim back in, clear signs down here of breakout traders shorting, reclaim back in, and there you go, carry on trading the range. Okay, if that doesn't happen, let it roll over. Then you'd be looking back down towards this zone, as we said a fair few times, this sort of zone here. So obviously the old macro range highs, there's a lot of eyes on the 25k sort of level. For me, the actual volume is just underneath it here. So if it does come down again, comes down, grabs the liquidity, comes back up, change your market structure, and then you've got a long trigger. Okay, and then effectively all you're doing is you're looking at this one big range, break out, come back, retest, and continue. Okay, that's if that holds. Now, again, I'm not saying even if that does hold, I'm not saying that that's then going to go to new highs. You just continue trading. Do you get acceptance back into this range? Yes, no. Do you get acceptance above this range back into this macro range? Play it level to level, okay? What happens if we don't get acceptance into here? And this now just turns around from here and goes up. Okay, possible. If that happens, then again, you're just going to be trading back into this low time frame range here. Zoom into the 4 hour. Drag this along. So, if we do manage to hold around here, we start moving up, then do we get back into this range? If we do, then I'm going to be looking back up towards this zone again, which is quite a big cluster, is this zone. Okay, within that, we've probably also got pocket smack bang on the EQ. Okay, there's something to be aware of. This is what, when you're looking for confluence. Above that, you've also got obviously this volume cluster up here. So we've got quite a lot of resistance above us. So if it does manage to get back up here, then you'd be looking up here. And effectively, it would just be filling in all this inefficiency. Okay, because if we look on the TPO profile once again, refer back to that, we can look at this profile. Now, this doesn't scream it as much, but it does kind of resemble a double distribution day. So there is a possibility that if we do start accepting back up here, then potentially we could be looking to get back through these single prints. Okay. Again, would it be a case of breaking up here just below these single prints and then taking a long? No, because why would you be longing into potential resistance? Yes, it could go through. It could go through like a knife through butter, but why would you be longing into resistance? Okay. Right. So that's the plan. Fairly simple. Hopefully you learned something from the start of the stream. If you did, let us know down in the comments. Smash that like button. And if you haven't already, subscribe. All right, guys, I'll do. Until next time, as you were. Bye-bye.